You ever notice how most market structure indicators just throw labels on your chart and call it a day? They show break after break, order block after order block, but they never tell you which ones actually matter. There's no context, no probability, no way to tell whether that structure break was driven by real institutional conviction or just random price noise. So traders end up chasing fake breaks, entering late, or trading order blocks that were never defended in the first place. This market structure indicator we are revealing today, it's designed to filter out low-quality signals and highlight the structural levels institutions actually care about. In this video, I'll show you exactly what this indicator does, how to set it up correctly on TradingView, and how to use it as part of a clear, repeatable trading strategy. To add it to your chart, head over to TradingView. Click on Indicators and search for Market Structure Break and OB Probability Toolkit by LuxAlgo. Once you load it, the first thing you'll notice is that this isn't a basic fractal-based structure tool. Most market structure indicators simply mark a break when price crosses a recent swing high or low. That's not enough. This toolkit uses a momentum z-score filter, which means structure breaks only print when price moves with real strength behind it. That single filter removes a huge amount of chop and fake outs and helps you focus only on breaks that actually matter. On top of that, the indicator automatically detects order blocks and plots them directly on your chart. Each order block comes with a clearly defined zone and a point of control, so you're not guessing where institutions likely entered or defended price. Even more importantly, the script highlights high probability order blocks, meaning zones that formed with strong impulse and clean displacement. These are the areas that tend to hold far more consistently than random supply and demand zones. The toolkit also includes session tracking, allowing you to see how structure breaks and order blocks form during major liquidity windows like London, New York, and Asia. That matters because institutional participation isn't evenly distributed throughout the day. When a structure break happens during a high liquidity session, it carries much more weight than one that forms during dead market hours. Before using this indicator, you need to get the settings right. Open the settings panel and start with the pivot lookback. This controls how sensitive the structure detection is. For most time frames, a moderate value between 20 and 30 bars works well, keeping structure clean without being overly reactive. Next is the momentum z-score threshold. This is the key filter. Setting it around 1.5 to 2.0 will ensure that only high conviction structure breaks appear. If you trade lower time frames, you can slightly reduce this to capture more opportunities while still avoiding noise. In the order block settings, it's best to limit the number of active order blocks on screen to keep your chart clean. Enable the option to extend broken order blocks so you can see how price reacts when returning to flipped zones, and hide overlapping blocks to remove clutter. These small adjustments make a big difference in readability. Now let's talk about how to trade this properly. In trending markets, this indicator shines. You want to see a clear structure break in the direction of the trend, followed by a pullback into a corresponding order block. In an uptrend, that means price breaks higher, then retraces into a bullish order block. That pullback is where institutions typically re-enter. Your stop loss goes just below the order block's point of control, and your targets are set at the next structure level or liquidity zone above, or your back-tested risk to reward. For downtrends, the process is the same but reversed. Wait for a bearish structure break, then look for price to retrace into a bearish order block. Enter on rejection, place your stop above the order block, and target the next downside liquidity area. You need to avoid those order blocks for entry, which have a lot of price action already done before retesting from that order block, and only choose the fresh ones. The key thing to understand is that this indicator doesn't give you blind buy or sell signals. It gives you structure, context, and probability. When you combine that with proper risk management and discipline, you stop reacting to every candle and start trading like a professional. If you're serious about trading market structure and understanding where smart money actually operates, the Market Structure Break and Order Block Probability Toolkit by LuxAlgo is one of the cleanest and most effective ways to visualize institutional behavior directly on your chart. Thanks for watching, and I'll see you in the next one.